Welcome back to the channel. I'm Algabot, and today we're studying an expert advisor for MetaTrader 5 called 3 Methods Continuation. This is a pure price action, trend continuation strategy. It uses no indicators at all. Instead, it reads the shape of the candles themselves, looking for a classic formation known as the rising or falling 3 methods. By the end of this video, you'll understand exactly how the strategy detects a trend, how it waits for the market to pause, and how it signals an entry when the move resumes. Remember, this is educational content only, and trading always involves the risk of loss. Let's start with the big picture. 3 Methods Continuation is a trend-following expert advisor. Its job is not to call tops and bottoms. Instead, it aims to join a trend that is already underway, but only after the market has taken a short breather. That breather, that pause inside a trend, is the heart of this strategy. The pattern it hunts for is one of the few multi-bar candlestick formations that signals a pause rather than a reversal. It comes in 2 forms. The rising 3 methods points to a continuation higher, and the falling 3 methods points to a continuation lower. Both share the same 3-part fingerprint. First comes the thrust. That's a single decisive candle with a large body that drives the trend in one clear direction. Second comes the rest. This is a short run of small candles that drift gently back against the thrust, but stay contained inside the thrust candle's high-to-low range. The strategy treats this as ordinary profit-taking, not a genuine reversal. The market is simply catching its breath. Third comes the resume. This is a fresh, decisive candle in the thrust's original direction that closes beyond the entire prior cluster. Because every gate here is raw candle geometry, bodies, ranges, containment, and closing prices, there is nothing to calculate and no indicator to lag behind price. The strategy is designed for liquid markets such as euro to US dollar or gold against the dollar on the 15-minute or 30-minute charts, although it can run on any liquid symbol and time frame. It places its protective stop just past the far side of the rest cluster, the point where the continuation idea would be proven wrong, and it sets its target as a fixed multiple of that stop distance. This style tends to suit traders who are comfortable following trends rather than fighting them. As always, this is for education only, not financial advice. Now let's walk through the exact logic, step by step. The expert advisor acts only once per freshly closed candle, so it never reacts to a half-formed bar. It also allows just one position at a time for its own magic number, keeping things clean and simple. It then lays out the recent candles from newest to oldest. The most recently closed bar is the candidate resume bar. Behind it sits the rest cluster, whose size is set by the pullback bar's input, which defaults to 3 and can range from 2 to 4. Behind the cluster sits the thrust bar. First, the strategy checks the thrust. It measures the candle's body against its full high-to-low range. The body must be at least MinBodyFrac of the range, which defaults to 45%. So the thrust must be genuinely decisive. The same body test is then applied to the resume bar. Next comes containment. The strategy walks through every rest candle and confirms that each one stays inside the thrust's high and low, allowing a small tolerance set by ContainTol, which defaults to 10% of the thrust range. If any rest candle breaks too far outside the thrust, containment fails and no trade is considered. While walking the cluster, it also records the highest high and lowest low of the whole group. Then it checks direction. For along the rising 3 methods, the thrust must be bullish. The most recent rest candle must have closed below the thrust's close, showing a gentle drift against the move, and the resume candle must be bullish and close above the cluster's highest high. For a short, the falling 3 methods, everything mirrors. The thrust is bearish. The recent rest close sits above the thrust close, and the resume closes below the cluster's lowest low. When a long signals, the entry is taken at the ask. The stop loss is placed just below the cluster's lowest low, minus a small buffer set by MinBodyFrac. The take profit sits at risk-reward times that stop distance, defaulting to 1.8. For a short, the stop sits just above the cluster high, and the target extends the same multiple below the entry. That's the complete cycle. Let's read through the actual MetaQuotes code on screen. At the top are the input parameters. Lot sets the trade size. Pullback bars controls how many rest candles the strategy expects, from 2 to 4. MinBodyFrac is the minimum body-to-range ratio that makes both the thrust and the resume count as decisive. ContainTol sets how much tolerance the rest candles get for staying inside the thrust. RiskReward turns the stop distance into a target, and BufferFrac adds a small cushion to the stop. Now look at the long block, the rising three methods. Three booleans must all be true. The thrust close is above its open, so it's bullish. The most recent rest close sits below the thrust close, showing the gentle drift back. And the resume close is above its own open and above the cluster high. When all three line up, the code reads the ask as the entry, sets the stop just below the cluster low minus the buffer, measures that risk, and places the take profit at risk reward times the risk above entry. Then it calls trade.buy. The short block is the exact mirror. The thrust is bearish. The recent rest close sits above the thrust close, and the resume closes below both its open and the cluster low. The entry is the bid. The stop sits above the cluster high plus the buffer, and the target extends the same multiple below. Then it calls trade.sell. Notice the risk greater than zero check on both sides, a simple guard before any order goes out. Let's walk through this illustration candle by candle, and watch both a long and a short play out using this strategy's actual rules. Remember, there are no indicators here, so everything we read comes straight from the candles themselves. We open with a quiet lead-in candle. Then the second candle stands out clearly. It's a tall bullish bar with a large body, closing near its high. This is the thrust. It tells the strategy that buyers have driven the market decisively higher, and its body easily passes the minimum body test. Now watch the next three small candles. They drift gently lower, each one staying neatly inside the high and low of that big thrust bar. This is the rest. The market is catching its breath, and some traders are taking profits, but nobody is forcing a real reversal. The strategy checks each of these candles for containment, and because they all stay inside the thrust range, the pause qualifies. Notice too that the last of these rest candles closes below the thrust's close, confirming the gentle drift against the move. Then comes the decisive moment. The next candle is a strong bullish bar that closes above the entire cluster, breaking past the highest point of the thrust and the rest together. This is the resume, and this is where the buy entry marker appears. Demand has reloaded, the leg continues, and anyone who sold into that shallow dip is now caught on the wrong side. The stop would rest just below the lowest point of the rest cluster, where the continuation idea would be broken. Price then pushes higher over the next candles and reaches the take profit target, which sits at 1.8 times the stop distance. The long is complete. Now the market shifts character. A tall bearish candle appears, closing near its low. This is a new thrust, but pointing downward this time, setting up the falling three methods. After it, three small candles drift gently higher, each staying contained inside that bearish thrust range. Again, this is the rest, just mirrored. The most recent of these rest candles closes back above the thrust's close, confirming the upward drift against the falling move. Then the resume candle arrives. It's a decisive bearish bar that closes below the entire cluster, beneath the lowest low of the thrust and the rest. The sell entry marker fires here. Supply has taken over again, and buyers who tried to catch the bounce are now trapped. The stop would sit just above the highest point of the cluster. Price slides lower across the following candles and reaches its take profit target, once more measured at the reward to risk multiple. The short is complete. In both cases, the trigger was identical in spirit. A decisive thrust, a contained rest, and a decisive resume that closes beyond the cluster. That symmetry is the whole idea behind this approach. So that's the three methods continuation expert advisor. We covered how it reads a decisive thrust, waits for a contained rest where the market catches its breath, and then signals an entry when a fresh candle resumes the trend by closing beyond the whole cluster. We looked at how the stop sits past the rest cluster and how the target is set as a fixed reward to risk multiple on both the long and the short side. Everything you saw today is educational information only, and it is not financial advice or a recommendation to trade. Trading carries real risk, and losses do happen. If you found this breakdown helpful, please like the video, leave a comment with your thoughts, and subscribe for more MetaTrader 5 strategy analyses. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.